Few Perfect. So few housekeeping issues to start. This will be recorded and the link will be sent to you after this class. We appreciate you all joining us this morning, and I would really like to start by acknowledging that today is September 11th, and we are just here to support anybody that's experiencing any sort of grief from that day. So with that being said, I am going to open it up and start by introducing our amazing panelists. So thank you all for joining us today. Marcy, would you like to kick it off and introduce yourself?
Hi, thank you, Erin, and thank you all for attending this wonderful What If webinar. Yes, my name is Marcy Kravit, and I'm the Director of Community Association Relations for Hotwire Communications. I manage properties for over 20 years. I'm also the author of Common Sense Community Management, and I'm also the contributing writer for the Florida Community Association Journal. And for those of you who don't know who Hotwire is, we offer community-wide fiber optic telecommunications services for communities. Thank you.
Awesome. Thank you, Marcy. Jamie?
Hi, good morning, everybody. My name is Jamie Gelfand. I'm the Regional Sales Officer at First Citizens Bank, covering the Tri-County market. First Citizens Bank is a 125-year-old top 20 bank. In the CAB, Community Association Banking Division, we provide financial solution options for property management companies and their associations. There are API integrations with over 20 software. In addition to Lockbox, we provide loan options for all of you working on your milestone repairs. There is a quick term loan for needs of $3 million or less. This loan, if the association qualifies, is approved in 3 days and closes in 30. There is also the traditional loan option for those needing a 15-year term with up to a 24-month interest-only period. My information will be posted in the chat if I can be of assistance, and I hope you enjoyed today's class.
Thank you so much, Jamie. Matt, would you like to introduce yourself next?
All right. Good morning, everybody. Thank you for joining us. I'm Matt Reedy. I'm one of the association specialists with Plastridge Insurance. If you're not familiar with Plastridge, we're a 105-year-old privately held agency based out of Delray Beach. When we started, we had the phone number 1 in Delray. Today, we represent about 1,300 condos, HOAs, and co-ops, primarily in South Florida or in Sweden.
Thank you, Matt. Nicole?
Yes. Hi, everybody. So glad everybody could attend. I'm Nicole Johnson Pendergrass with Hafer Companies CPAs. We specialize in the area of HOAs, condominium, developer turnovers, taxes, assisting all associations in the financial world, budgeting time, especially with all the new laws that have changed. You really need to reach out to your professionals to make sure that you're abiding by everything before you get to year end and the audits come in place and you're not in compliance. So I appreciate the time today. Thank you.
Awesome. Thank you, Nicole. Paula?
Thank you. And it's nice to see all the panelists today. This will be a good course, I believe, with hopefully a little bit of fun added to it, because we all say when we see each other, you can't make this stuff up, right? But I'm a shareholder at Rosenbaum Law Firm. I've been practicing condo, HOA, country club, everything in between that goes with the general corporate day-to-day practice, and also litigation that relates to our associations as well. Today we'll be getting started. I'll share some stories as well, but I started at a law firm in Boca Raton in 2003 and practiced there for around 14 years. Found Rosenbaum because it's a smaller group practice with hands-on with all of our clients. So Katie introduced herself, I think, just a bit, or did you, Katie?
I did.
Katie did not introduce herself, but I would like to just introduce her from the sidebar. And Katie is a property manager for 26, 27 years. She works with our team of attorneys to assist our association clients. She is a non-billable resource for our association clients. So we also have Steve Brayton, 27 years of experience, and Stephanie in our department as well.
Awesome. Thank you, Paula. My name is Erin Nickerson, and I'm the Director of Sales for the state of Florida with Unlimited Restoration. And we are a licensed general contractor that specializes in water damage, fire, mold, dead bodies, all the things that you never want to happen to your property. I clean those things up. And I have the distinct pleasure of moderating today's conversation. And it's funny, as an industry expert in my field, I work with the other industry experts that are on your screen right now. And every time we get together, we say, I can't believe that this just happened. We tell each other stories. So we got the great idea to put together this expert panel for you of the most extreme situations that we have ever dealt with. And if you have any extreme situations going on at your property, please feel free to put it into the chat. We would love to talk about this. And it's funny because I remind myself that in community association management world, you really haven't seen it all yet. And there's something that happens that you're like, Nicole, I can't believe this. Paula, what do I do about that? Jamie, how can I get financing for this project? It's crazy the things we see. So let's get started. And I have a great one for Jamie and Nicole. So we had sent you all an email prior to this class saying, what if? What if this happens at your property? And some of you gave us some really good scenarios. So Jamie and Nicole, what if a president of a condo used the debit card at the ATM machine at the casino and also decided to buy a Mercedes out of the association's reserve funds and call it a security vehicle, but title it to himself, and then wonder why the association's insurance policy cannot add on the vehicle for insurance? And guys, these are real life scenarios. This has happened. So
That was my case. That was one of my audits that I did. So it's interesting you're bringing that up. We started an audit, and the board president, we did the interview for the audit, and he's claiming that this is all legitimate, that he's able to go to the ATM and he was using it for supplies, which we knew he wasn't. We saw receipts on the credit card statements. He was flying to Las Vegas. Then he claimed that he personally gave a loan to the association. None of it had occurred at all. So us as auditors, first thing is we're ready to disengage because we're saying we can't take on a client that we know this is going on. Well, interesting situation. He tells us that we can go to the board meeting and we can tell everybody what's going on. So we put it into our audit report. We disclaim the audit. I go to a board meeting with all the unit owners there and tell them what's going on. The one lady stands up. I can't make this up. And she says, at least he did not raise our dues. Right then I said, yes. He had stolen over $3 million from the association. Right then we walked away. We fired the client. We walked away. The state got involved. The FBI got involved. But the interesting outcome was he was never arrested. He was never, ever charged with anything, which scares me in the state of Florida. A lot of the cases we do in fraud, the people don't get prosecuted. And the problem with that is they go somewhere else and they do it. And you can't talk about it because it's never been proven in a court of law.
wow.
So from a best practices scenario, first of all, we all should know that debit cards should never be used. Once funds are taken out of a debit card, for all intents and purposes, that money is gone forever. If an association is going to allow the use of a credit card for purchases, you should contact your financial institution. Many of them, like we do, allow for credit cards in the name of the association. And then a resolution should be established by the board, including the limits of the card and the best use policy for that card. Like all banking transactions, they should be reviewed regularly. There should always be a checks and balance to make sure that eyes are always looking. Not one person should be running any of the association's funds. Fraud is an ongoing event, and any fraud items need to be reported to a bank in a timely manner. There are time limits on all different fraud transactions for which an association may be reimbursed.
And if you have a credit card, one of the things, good practices, Jamie brought up great points. Never have cash advances. It's something we look at the audit. If there's cash advances on the credit card, there's not a need for that. And we always tell our board members every month, you should be looking at those credit card statements. and looking at it, make sure there's receipts to back it up and anything unusual. If there is, make sure you're reaching out to your professionals.
Those are all really good points. I'm just going to jump in for 1 second. Both made the overall big picture of the points that Jamie and Nicole have just made is you are a board member. You have a fiduciary role when you take your board seat. So that does not mean that you get to check out, even if you're a snowbird.
Yep.
You have to make sure that everything is, again, best practices. If you adhere to the best practices as a board member, you're not going to be in a situation where you're looking at someone put the little light on his Mercedes as he cruises around the neighborhood at night, and then wonder why your auditor won't even take your work. So that's every point that Nicole and Jamie just made would be just best practices. You are a board member. You may not be the one that did something nefarious or bad or wrong or fraudulent, but you're still serving on the board. So when you take that seat, you have to take it seriously.
Great point,
It's,
Paula.
It's crazy to me
I-
that this is a true story. Marcy, you want to chime in?
Yeah, excuse me. I forgot to mention, I'm also on the board of directors of my HOA, and we have an advance limit on our credit card. And there's a maximum of $1,000, and I highly recommend that. So that way no one's tempted to use it and abuse it.
Yeah, we put that
Absolutely.
in the internal control letter. We had one that had $100,000 limit. We're like, there's no necessity for that.
None.
If anything, you're paying at $50,000, it should be through a check. So that's a great point, Marcy. That's
I'm
excellent.
just going to circle back around because Jamie made the point of saying a board resolution, which Kate and I talk about this all the time with our clients. The board resolution, which dictates and establishes that within itself will also hopefully keep people within the guardrails of wanting to do something that is fraudulent, or even in certain situations that we've seen, there's the situation where a person doesn't mean, should say doesn't mean, they think they're going to correct it. They're going to write it later on the right way, and then everything just gets out of control. So guardrails by resolution is an important, again, best practices tool.
And Matt,
Absolutely.
from your perspective on the insurance side, a lot of the fraud cases we see, some of them are not even filling out the application right to the insurance company. So if they have fraud, isn't an issue with the insurance?
It could be if you have misrepresentation or the wrong information on an application. So that was one of the things kind of going through my head on your story is a lot of these companies are asking, take a quick step back is normally the clients that are self-managed are going to have fewer controls on how the money is managed and who's auditing it. And those are some of those questions that are in those applications of who's auditing it or auditing. Is it somebody separate from who handles the money? Is it a third party? Are they doing their annual audit? Are they doing their review or whatever else they need to have? The client recently where we were trying to get them, it's a new client, we were trying to get them a more proper crime policy for them for theft of association funds, and they weren't eligible for the policy I wanted to move them to because it's the board and the board audits the board. And so that was a problem for the company that I wanted to get that quote from and just torpedoed my crime quote. So not only do you want to be looking at what your crime limits are, and this is a reminder that Florida statutes 7/18 and 720 specify that you have to have the amount available at any given time for your crime limit. So whether that's if you have $2 million in cash plus $1 million in reserves, you should have a $3 million crime limit for each of those items in there. But you also need to make sure that you're answering those questions correctly or avoid the coverage.
I have a question for you guys when it comes to the insurance side of it. Would the directors and officers policy cover that crime, or would it, if a director stole the money to buy that car?
There may be some degree of the claim that gets directed to the D&O, at least to start, but almost all that claim is going to get directed towards the crime policy. That's the policy specifically set up for the theft of association funds. Now, maybe if there's other wrongdoings that are in a suit brought against them, it goes to the D&O, but I'm also now thinking this through a little more. It's probably the association suing and going after that board member. Technically, they could be an insured on that D&O policy, but if we're careful on how we craft that litigation, we may be able to keep it off the association's loss history as well. It's just kind of messy. I get my favorite attorney answer is it depends. I end up having to give that same answer for a lot of scenarios as well.
I mean,
That
we
is
had
the
a-
correct answer.
Yeah.
Ding, ding, ding.
All right, let's move along because we have another question for you, Matt. So let's say an association receives a large payout for insurance in an HOA to replace their roofs after a storm. And the predecessor board finds out that the prior president distributed the money to all of the townhome owners to do their roofs, and then wrote checks to himself for all of the unit owners in foreclosure and forged the ledger. And in the end, very few of the roofs were replaced and Citizens was threatening to cancel. So let's talk about how to
Yeah,
fix
please-
the situation.
Please don't do that. I mean,
How would
that's
an association fix this to start?
one, you're gonna file your crime claim. I guess this is a good reminder. We already mentioned this, the statute of you have to insure for the maximum amount of funds available at any given time. When you do have a large insurance claim, and we had clients after Irma got $2-3 million payouts, we increased their crime limit until those funds were, paid out from that account for their roofs and whatever other damages they were. So it's not just something you evaluate at renewal. If there's an extra circumstance where you have a larger influx of cash, that's something you'd be evaluating well. Again, crime is probably the cheapest policy we have other than our minimum premium workers' comp. I'm trying to think the last crime, $800 covered $2 million, depending on which company and what it is. I mean, it's nothing on what you're spending for the year. So it's one policy. It's really easy to make sure you have the full limits that you need to have. So that scenario, you're filing your crime claim, the roofs, I guess, try to get that money as quickly as you can, make the repairs, because not just Citizens, but any insurer is going to have an issue with older roofs, especially if there was a claim paid because it was determined those roofs were damaged. A lot of the companies now have existing damage exclusions. So let's pretend, Citizens does have to get off of it and you have to put it with one of these excess surplus lines companies. You're effectively going into a policy where there is no coverage for those roofs that were paid because they were deemed to be damaged enough to be paid on, but not yet repaired. There's a lot of different layers to that, but in my world, it's primarily going to be a crime claim as well. You just need to make sure you have the proper limits. And again, to Nicole's question earlier, make sure the questions and the applications are answered correctly.
And from my perspective on that, I would say before the crime even occurs, let's put those funds from the claim into FDIC protected accounts at a financial institution. Let's set up a committee that's working with the contractor and have, again, the checks and balances to make sure that crime doesn't get an opportunity to be committed.
So most of the time with any of our policies where the association is covering, the townhome scenario would typically be obviously a single family home that's owned by an owner, not necessarily a condominium association. However, you're going to cover the roofs. Katie and I always laugh about the situation where you have the roofs covered by insurance, but yet it's the owner's obligation to maintain and replace. In any of those governing documents, condo, for certain, you have what's described as the insurance trustee. So whenever an association entity receives insurance funds, it should go through an insurance trustee, or like Jamie, you just mentioned, like a committee. So some of the newer documents may not reference an insurance trustee, but they still reference the fact that the benefit of those insurance funds need to obviously be spent for the matter of replacing the roofs. But there's usually an insurance trustee requirement. And to Jamie's point as well, when you have those insurance funds, they actually do go into a separate account so that the association board of directors, not the bad guy board member, is they're controlling those funds, and they're usually using through an insurance trustee or even a third party, but most of the time through the board or a committee to make sure those funds are expended according to the disbursement of those funds from the insurance company.
Yeah, we have some of our associations, their documents require it. So back when the hurricanes came through, they used somebody that administered that. So there was less likely fraud because there was so much oversight on those invoices that were coming in.
And everyone is really busy right now anyway, but from time to time, I have to look for an insurance trustee. sometimes through a banking institution or otherwise, to administer those funds. And it's basically a checks and balances. So had we had a checks and balances with this little scary story, this wouldn't have occurred, because legally what would take place after this as well, after Matt turns it over to the crime policy for fraud, we're going to move forward as an association if Mr. Bad Guy board member, doesn't have to be a guy, actually, it could be a female board member too. Let's not leave that out. Let's be equal. We would be looking to see whether or not, of course, we would seek civil damages against that particular board member as well, because he's obviously expended with funds, he was committed fraud. But back to Nicole's point that she made earlier, I just kind of want to point this out. In my 23 years of experience, the Mercedes example, and the crime of literally stealing money from an association as a board member, it is very few and far between where law enforcement will actually prosecute those cases. And it's pretty shocking what I have seen. And even from my ex-husband's spouse, he was in law enforcement, sometimes looking and investigating those cases. And until it reached a certain dollar amount, and that's over $500,000, the attorney general or the state prosecutor would not take the case, which is just so the listeners out there, that's kind of it's kind of an interesting piece that you wouldn't imagine that that's the truth of it, but that is the truth of it.
And what's interesting is what we see too, and that's a great point, Paula. Sometimes we'll catch fraud and the board members are embarrassed by it. It's one board member that did it, so they don't want the community to know, which they have to know. But they'll say, we don't want to prosecute because we don't want to make this known. We had a case where a board member was confiscating the bank statements from the mail, so nobody saw that he cleaned out the reserves. They never prosecuted him. He ended up repaying it. He still lives there, and now he's starting to run for the board again.
Oh my
I mean,
God.
this is the stuff you can't make up, and you're like,
Right.
people would really vote for him again. I mean, it's crazy to me, but they shouldn't be embarrassed. It happens. You want to make sure that you do the corrective action, that it doesn't happen again.
So with the new laws in place, they're subject to criminal penalties. Do you think, Paula, there's going to be, you're going to see more enforcement?
I would like to see more enforcement, but even a couple years ago when they put different criminal penalties in for not returning the records, which is obviously a much lower level of a harm done, right? But there's no information law that follows up with even a Florida administrative code to say this is the process you take. You contact this particular law enforcement agency. I can tell you that if you did have some crime that occurred, the ones that we're describing, you would contact most likely Florida Department of Law Enforcement to see if they would take the case. They're multi-jurisdictional as opposed to your local sheriff's office. And there are many investigations that go forward through that particular agency. But again, when they even have spent, say, a year trying to investigate and gain all the information, they take it to the state prosecutor, they take it to the prosecutor, and the prosecutor says it doesn't meet our threshold because we're just too busy investigating crimes. It's like a Taylor Swift song. I'm going to bring that in just so Katie can roll her eyes at me really quickly. And you want to do, it's Welcome to Florida. She has the song Florida. But to that point, sometimes even with the FBI in Florida, they say if it doesn't reach a threshold of multi-millions of dollars, they don't investigate it, which is
So restitution would have to take place and the association would have to sue the individual personally.
civilly. Yes, in a civil court. Restitution would be a criminal court. And again, it would not take place until that person's prosecuted. Now, I can say if you push hard enough, perhaps, we did have a case here at our firm where there was a person moonlighting for about 15 years in employment. And our managing shareholder was able to contact the state prosecutor and get that particular person prosecuted. But that was just, sometimes you got to know somebody type of thing.
Understood. I want to stay on this crazy true story of all things illegal that we're running down, because I have a personal story that I want to share with everybody. So I was working in a condominium building. Somebody had passed away when our team went in there to complete the biohazard project. And Marcy and Paula, I'm going to ask you to chime in on this one. We found illegal guns. We found drugs while working on the association portion of the project while inside of the unit owner's condo. So as a property manager, what do they do in that situation?
Wow.
Well, I would say, first of all, don't touch anything. Avoid handling or moving anything that you discover because, you know, your safety comes first and you want to preserve that evidence, obviously. And then I would say contact the authorities right away. I mean, immediately report your findings and making sure that, you know, you remove yourself from being accused because you're a outsider, you're a service provider, and you don't want to be accused of putting anything in the apartment. So, you know, provide them with as much detail and have even get your security, your you know, I manage high rise. I always got my security involved, document, take pictures. And if you're able to, you know, make sure that you contact the board right away and let them know what's going on. I mean, safety is your top priority. I mean, it's really crucial to let all the professionals handle it, especially when it's a dangerous situation.
What should they not do, Paula?
Well, I think for our viewers today, what's interesting again is, as you described that, I think in the last 4 years, we've had 2 of those situations for just clients that I'm familiar with. So it does happen from a property manager's point of view. Like Marcy said, the first thing is instinctually, you're going to back up, back away and call law enforcement. But then the second thing that you're going to have to do is communicate, obviously, to the board, and the board's going to need to communicate with the owners, because instantly, within minutes, hopefully, you have law enforcement all over the property. And we have a different class for that too, that Katie sometimes and I do, that says, what do you do? Because Katie's experiencing that as well. It's like Marcy's, it's like you've done this so many times, unfortunately, where you have to have an immediate response. From a board's point of view, from a kind of a management side, the best thing you can do is make sure your manager's prepared for something that is described as a murder scene, money, guns, drugs, blood dripping from the ceiling into the apartment below. That was 4 years ago for one of ours. But from a legal standpoint, the first thing that we would do as legal counsel is make sure that we control the media, we control the communication to the owners. So that would be the next step. After law enforcement, contact legal counsel, get legal counsel involved to mitigate anything that can be mitigated from the media point of view, and also from the owners wanting to receive information as to what is happening to their home, to their condo, to their HOA.
When I was a property manager, the management company I worked for, we actually had a policy of what managers were allowed to say to media. And basically it was no comment,
Right.
because anything that you say to the news media can be construed in a lawsuit, can be used later. So, you know, it's the natural occurrence of people to speak, but it's the ability to learn that less is more, right? Saying nothing or deferring to the management company or to the attorney's office is the best approach for a manager or a board member.
100%. And I think that's kind of maybe the highlight takeaway point for this type of example, because ultimately, even as legal counsel, you're not saying anything. And to your point, Jamie, even a decedent's family or estate can sue for the defamation of that person's reputation. And Matt, you might want to speak to this too, because what I'm seeing with defamation claims and cases, it's increasing overall, not particularly in that situation, but for property managers, you have to back up and not say anything to media, or even sometimes when you are approaching the email that you may send to the owners, that too needs to be reviewed by legal counsel, and potentially even have legal counsel send it out from a manager's position as opposed to management.
Thank you, Paula. While we're on this, my favorite subject of dead bodies and things at your property that should not be there, I want to talk about a little bit about water damage, or even accessing a unit for a wellness check. So Paula, this one is for you and me. What if, and this is a question from one of our people, what if the manager needs to get access to a unit for investigation of a leak and the renter is refusing to allow entry? When the manager goes to the door with a locksmith after giving proper warning, he is met with a gun in his face and threats not to answer. So can we talk about legal right of entry, police, and
Right.
injunctive relief?
Right. So the takeaway point here is you're not going to do that for a water leak. You're going to contact legal counsel and we're going to move through the requirements to obtain an injunction. It's not the preferred method, but it's not 1972 either, right? Where you're just going to go change the locks and bust into someone's condo. So you're going to move through the injunction. You're not going to, as a manager, enter that property. There is case law that's recent that indicated that emergency is not a water leak, even though, Aaron, you know that it can be as soon as mushrooms are growing all over the walls. From the manager's point of view, you want to make sure that you contact legal counsel when you know the water leak may be occurring. We all know when it's occurring. And the association's attorney will move through the steps to notice the renter, notice the owner, and then that would be the purpose of an emergency injunction to gain access. But there is case law that has determined that that particular water leak, or even when it's doing damage to the common elements, is not an emergency. Set that aside from when we have water gushing down into the elevator bays from the pipe that totally burst open, or the fire sprinkler system where the contractor broke a pipe while doing some work. That's a little bit different. But when we're talking about our typical water leak that we're all familiar with, you're going to contact legal counsel to get an injunction to enter that unit and not approach the unit through a locksmith for that particular scenario.
So Paula, just so we can be a little bit more clear, we're talking about like a wax ring on a toilet from 607 leaking into 507, unit owner to unit owner losses. We talk about that, right? That would not be an emergency.
We're talking about the extreme gushing of water down the
Okay.
walls. I like that one. Okay. So that's a little different. We can contact, we're going to knock, we may get to, let me back up. We typically know who's there. If it's the tenant that we all know is going to put a gun in our face, usually you're going to have a good idea of that. If so, then you can contact law enforcement for right of entry if they'll come out and entertain that as anything but a civil matter. So that would be the first approach, is to contact law enforcement to see if they can assist in gaining entry. They may not oblige to doing so. So if that actually occurs and you try to gain entry and that person has pulled a gun on you, then that's obviously a crime. And so like many of the calls we get often from board members, what do I do about this? I'm like, well, that's a crime. So call the police. Don't call Paula. I don't have a bat that big. Be happy to do that for you if I could, but that's what you'd want to do. So straight, simple answer forward is if that actually occurred, that is a crime. It's like many other things that occur, unfortunately, for our board members. Contact law enforcement when you've been assaulted in that particular situation and let them handle it. That doesn't necessarily answer our question for what do we do about the gushing water. But at that point in time, I hope the person's in cuffs and then you can go in and stop the toilet from gushing down the walls.
We did open a little bit of Pandora's box. So if you could just quickly explain how Florida state statute governs condos for water losses. We have a question that, what can I do when the owner above refuses to pay for damages to my unit? So just real quick, if you could say how that works.
Yeah, so that's such an interesting topic. And we have a really good panel that we've done in the past on that as well. If you are a unit owner and the unit owner above you, besides you, has caused damage to your unit, that is a civil lawsuit. You'll need to contact an attorney and sue that other unit owner, making sure the association, in the position the association stands, that the association has went in, and if it's the drywall repair, that's what the association has performed already.
Thank you. So essentially you either have two choices when it's a unit owner to unit owner loss. Either you file a claim with your insurance carrier and they subrogate against the responsible party, or you hire an attorney to handle that process for you. Those are your two choices.
Yes,
No
thanks.
problem. Thank you, Paula. Marcy, I have a good one for you. So with your role previously being a regional director in your most recent past, what if an owner has a heart attack in the middle of an annual meeting, falls to the floor, but the president refuses to stop the meeting even when the paramedics are coming in and taking the man out on a stretcher? Real life story.
Yeah.
Yeah, it's very similar to a situation that I actually experienced. So, I mean, first of all, as a manager, you're there to serve, and this is a serious health emergency and this requires immediate attention. So as a manager, I would address the president and I would just calmly, just firmly request that the meeting be paused, that we recess. And I mean, this is showing that you're thoughtful, that you're compassionate, and you're demonstrating that you're a strong leader and you're prioritizing the community's well-being first and reinforcing the culture of being, you know, empathetic and taking responsibility for it. I can't imagine why a president would want to just continue with the meeting while someone's laying there having a heart attack. The meeting has to be recessed. And then as soon as that individual receives the immediate attention, the paramedics come onto the property. And then I would say to the president, look, after, you know, this has caused like a major issue. You may want to reconvene at another time, adjourn the meeting. I mean, safety comes first. If the president refuses to stop the meeting, I would just take charge and call for a vote to pause the meeting. And because the health and safety well-being is your top priority as a manager. Emergencies come first. And then after the incident, after things calm down, you know, if they decide that they want to move forward with the meeting, then that's up to them.
Mind blowing, but that's real. I want to jump back to my financial gurus now because that was intense. We have so many horror stories here. So here's a few questions for you, Nicole and Jamie. What if the board is okay with accepting cash payments at the property, but the money doesn't seem to make it into the count?
So I had a situation, we were out doing an audit and I was on site interviewing the board and saying, do you guys accept cash? And they said, we never accept cash. A guy walks through the door, you can't make this up, pays his maintenance fees, $5,000 in cash. So they said, this never happens. This never happens. Absolutely it does. So the first thing on our audit perspective is, in today's world, why are you accepting cash? Most associations are paperless. So I would never recommend accepting cash because that's an area that is easy to be able to be stolen. Somebody comes in and is paying for something for $10, $15, use a credit card, use checks. I never recommend cash. Like Jamie being in the banking industry, everything's paperless. They can use the credit cards. They can get a machine, have it on site. People can pay through ACH. There's so much availability and not accepting cash. So our perspective from an audit perspective is you should have a sign saying we do not accept cash.
And from the banking perspective, that's exactly correct. You're going to use a financial institution that has lockbox options. One of the options we have is a process called amenity pay, where even though they're not paying their assessments, they still have the ability through a remote scanner for their gate clickers, for their garage door openers, for those small expenses. They can still accept checks, put those checks through a remote scanner, have them uploaded into their accounting software. Repeating what I said before, it's so important to have checks and balances within an association and those proper resolutions and policies written so that all boards today and tomorrow know the intent and should be carrying forward good practices.
So I just want to point out a couple different things with respect to the requirement to have a certain payment tender, whether it's check, online, credit card, debit card through our online systems. It's not 100% clear that because you're a community association, you are not engaging in a consumer relationship per se. The owner has to pay the assessments. So there is some question whether or not federal law would control if I can pay cash or not, or if I can bring a wheelbarrow of pennies in. Now, you're going to ask, okay, well, can we adopt a reasonable rule to say that you have to pay through these methods? I believe so, and that is probably what I would advise, but don't absolutely think that you cannot have someone not pay cash. I agree with Nicole and Jamie 100%, and I actually have a horrible experience where I had to stand in a courtroom and lose the case because the person paid cash, but only showed the cash deposit receipts 2 years into the case, right? And that person who took the cash, the receptionist at the management company, was no longer around. So I have that real life experience of actually having to stand there in a courtroom and have somebody produce those receipts to the judge. So I agree, best practices. If somebody, if an owner is obstinate about wanting to pay cash, again, I hate this response, but I like to give it. Contact your attorney to see if you can navigate around that person's commitment to want to pay cash for his or her assessments. The second.
Would the ability then be to direct that individual to take that cash directly to the bank, giving them the account number that it should be deposited in, so that the manager or management is not touching that cash? Is that an option?
I think that would be an option. Anything that's, again, our rules and regulations are going to be based upon reasonableness. The only way that kind of slaps us in the face with respect to cash is because it's not a consumer, and I just kind of want to draw back a little bit. A consumer transaction, when I go into Target and they tell me I have to pay by a certain payment method, I'm engaging in a consumer transaction. I have a choice to walk out. They have a choice to say, you have to pay this way. That's the difference I'm trying to make here. For assessments, you don't have a choice to pay those assessments. That is your assessment because you own the property. So that's the little piece I'm kind of trying to just like put a little asterisk on, right? A little footnote. But ultimately, if you do have someone that wants to pay cash all the time, you're going to set up a best practices where then fine, you go down to the banking institution, you're not going to the receptionist and of the management company, right? The front desk person or otherwise, to have that cash submitted with a cash receipt paid. We've all been around long enough to know that the good old days when you had the 2 different receipt books, you had one receipt book issued to the front desk person and they were going to take the cash, right, for the assessments. And then lo and behold, 3 years later, you learn that person had 2 receipt books working at the same time. That's the way this stuff kind of plays out. The second takeaway point I wanted to make really quick is lock boxes. And when you have delinquent assessments, do not lock the delinquent person out of the lockbox. You have to continue to accept payments. There's case law on that as well. We need to do an article on that. Katie's going to do that later this afternoon so that everyone understands when you do have a delinquent owner, they have to be able to make assessment payments and then you just apply it pursuant to statute.
So I
And
feel
I
like we're
think that
skirting
really
around
isn't-
like one thing real quick, and I want your opinion, Jamie, on this. So we're kind of skirting around when employees are taking money from the association because it's cash. And we're seeing employees on the general ledger, charges to Morton's, charges to Neiman Marcus. How can an association prevent those things from happening? What is the best practice, Jamie?
Again, that goes back to the resolution that the board makes about what is a credit card used for, what are the approvable expenditures, having clear communication, transparency of what is the expectation. That to me is the best practice of that. Going back to Paula's comment about that they should be allowing cash to be funds to be taken on someone who is delinquent, I think is a really important topic, maybe for a future class, because I don't believe a lot of management companies or board members truly understand that concept.
Yeah, maybe
I had a manager that was charging on the credit card and then returning things and getting cash back. This was
On a
many
credit card
years ago.
transaction?
Yes,
Mhm.
this was many years ago, and they were just pocketing the cash. And so we had to put checks and balances in place. Well, nowadays it's not that way. You used to have an option to be able to get cash or for it to go back on your card or get a store credit, and then they could purchase something else. So again, with management companies, they have their checks and balances. Self-managed properties, I always say they need to be aware. I also experienced a manager that was using a debit card, and it's a good thing that when I heard that we were going to no longer have the ability to use a debit card, but this person had a gambling problem. And this person would go to the casino, and used the debit card. That person eventually was caught, served time, and was responsible for paying back every single penny.
Remember
you.
one thing too in fraud, and we learn it in the accounting world, is it always starts small. So if board members are really looking at those credit card statements, they're always going to do one little transaction. If you catch that, there's accountability, and it's less likely they're going to do more and more. But if you don't look at those statements, they don't get caught. They get bigger and bigger and bigger. And by the time it's caught, there's so much fraud that it's enormous. So always be looking at those statements.
To
I
Nicole's
always
point,
recommend
we had
that-
an Go ahead.
Go ahead.
No, I was gonna say, we had an association where we noticed that they would take $1. They hacked our accounts, and they just, they took $1, and it was like a test, and then they would take $20, and we were watching it as it was happening, and then we were able to shut down the accounts. But that you're exactly right, Nicole. That's what
I do.
happens.
And to the point of they should be checking their statements, I think there should be a finance person or board members that are assigned to review the actual bank statements online from the bank,
Me too.
not just what their management company or manager is providing, because I've seen circumstances where the manager changed the bank statement, and that was what was presented to the board. So because of that deception, that board never knew that there was actually any activity that was questionable until an audit was done, because the auditor is asking for the bank statements from the bank.
Correct.
So board members should be looking at their online statements. They should have online access, in my
Good
opinion.
point.
That is a best practice, and I'm going to use that. So when I'm actually checking my bank statements, when I'm on an airplane one time, I find out my daughter has $500 eyelash budget every month. That's the kind of stuff we're talking about.
Exactly.
Exactly.
Yeah, that was a fun,
Unfortunately, we
that was
see
a fun
way
time.
too much.
Watch
of
the
this.
movie Office Space. It talks
Mhm.
about that. He ciphered
Right.
off a penny and it ends up
Yeah.
being millions. So
Yeah.
You got the algorithm wrong.
Love that movie.
That's
I
a
want to
good
stay
one.
on fraud. I want to talk about fraud a little bit more. So Matt, I'm going to turn to you on fraud, insurance fraud. I see so many associations doing this when they have a damage issue, they get reimbursed by the insurance company. So what if you find out the association is knowingly trying to commit insurance fraud by claiming that items are damaged due to age and improper maintenance that are damaged in a storm? I know you all on this call have seen this happen before.
You figure out the right way for me to answer this.
So maybe we take it in two steps. Let's talk about the recommendations for the manager as well as how the manager would handle the board.
Yeah, I mean, so I had a situation after Hurricane Irma where an association wanted to file a roof claim. I'd known that there had been some issues. I had some knowledge of what was going on. They swore up and down it was a roof claim. And so we submitted it. You know, I'm the agent. I work at the discretion of the board. I had it in writing from them. Please submit the claim. So we did. At the end of the day, the client ended up, when the adjuster asked for estimates on the roof damage, sent them a roof proposal for damaged roof that was dated prior to the hurricane. So that one kind of sorted itself out in the end. They were lucky they didn't get hit with fraud. It was just a denied claim in that scenario. But you know, if you're the manager, kind of the same approach I would take is we work at the discretion of the board. I documented everything that I knew and presented the information that was requested of me by the company, made sure there were no intentional misrepresentations of what was submitted, just said, here's the claim. Their board believes there was hurricane damage from this, and you know, please set up the file and send out an inspector to come and evaluate and let the company discover. Now, again, that one particularly sorted it out. There's been examples where I'm thinking of one here locally where a public adjuster got involved, and you know, this has kind of been the agent and company complaint with public adjusters, is sometimes they overblow the extent of damages a community had. Their marble lobby marked up as part of the damage and they got paid. Where this ended up backfiring that association is they were trying to go to Citizens because they're a coastal high rise and they weren't Class A. So that was the only market that was going to take them. But Citizens looks at, you know, what had the losses been? What were the damages? Have all of those damages been repaired? So Citizens saw the loss runs, saw the claims report, saw that there was, you know, I'll just make up a number, $1 million worth of marble damage in the lobby, but saw that none of it had actually been replaced. Citizens actually ended up rejecting that association, saying that you got paid on the assumption that this was damaged and you never repaired it. You have existing damage, and that is going to preclude you from coverage with Citizens. So a lot of the companies, I mean, they're not stupid. They're gonna probably catch you eventually, but as a manager, I would just say document everything you can. You know, we work at the discretion. If there's something that's just blatantly fraudulent, you know, okay, maybe take it a step further than that. But I guess for my scenarios, pretend we're operating in more of that gray area where, you know, you can see that it's probably an issue, but, you know, maybe pick up the phone and call somebody like Paula, talk to somebody like Kate, and get some legal counsel as well if it really does cross over that line completely. Again, for these purposes, I'm kind of operating in a scenario in my head where we're kind of ambiguous of which way it could go. It's not blatantly fraud. It's blatantly fraud, then, you know, we're going to handle a different situation there, not to confuse that.
Thank you. Paula, I have a really good one for you, and this is real life. I remember this story. What if you find out a unit owner is making porn inside of their unit and actors are parking all over every day for hours at a time, and the noises are bothering the adjoining unit's condo co-op?
Wow.
Let's talk about parking first.
So with that, you know, to kind of peel this back a little bit, the adult porn studio, I guess every porn would be adult, but the porn studio that's operating out of the unit is a violation, obviously, of your declaration. But with that typically comes some, again, legal issues from a perspective of what's going on there. There's ambulances called at night. There's the parking. There's the stealing potentially of electric from the pool area. I don't want to be too specific here. You have to, obviously, the board of directors has to come together. This is one of the more important takeaway points for this particular scenario. When this occurs and you know it's occurring, and you are 99% sure that's what's happening in the unit because perhaps the maintenance man had to go into the unit for a reason or another. The first thing you want to do for a board, from an attorney's perspective, guiding your board, is this information stays within the board. You have to make sure that you do not defame anyone. You do not say things that may be untrue or say things that may be true that are hard to prove that are true. So we want to step away from having any, claims against the DNO because you've defamed the movie maker to some degree and his reputation, or perhaps even his movies that he's making. I'm not sure. The next thing is, again, you have to walk through the declaration, most likely, even if it's an injunction that you have to, as the board, the association has to file an emergency injunction for violation of the rules, regulations, violation of the declaration, operating a business, I hate to say it, out of the unit. That would basically be the next step. So although it's a very colorful fact pattern, you kind of have to draw back from that and recognize it is a violation of the declaration, including anyone that's coming out of that unit that may have been a drug overdose, et cetera. All of those things are kind of associated with that. But you do just move forward to enforce the declaration, which would be an emergency. And well, it wouldn't even technically be an emergency, but it'd be an injunction, a complaint for injunction, and also a motion for injunction that you walk through the court to stop this person from having, from running this particular business out of their unit.
I was going to say it. I'm jumping in here with Paula. It's not, I mean, obviously we're giving you an extreme, real, true story, but it happens a lot with house-made services,
Right.
painters, people that are trying to do that. And they come in the morning, all the people come in the morning to the house.
Well, we were talking about parking. That's a really case specific situation for any condo, HOA, et cetera. Parking on one side of the street versus the other side of the street. But overall, the example is, again, back to kind of drawing it back down. when you have that as an example, the community their radar is up with respect to being offended that that's even happening, that's even occurring in their home, right? Whether it's an HOA or a condo, that's still where you live. That's still where you're calling home. That's still where your grandkids are coming to visit. And you have this situation happening in the condo next door or the condo above you. So that particular fact of it, I don't want to lose that in the example at all, because that's what's occurring for our board members to have to address people to say, what is going on? This is what we heard. All of those things, again, I hate to say it, get your attorney involved, because you don't want to step in the wrong situation or this wrong place where this person's going to say, okay, you've defamed me. That's actually not what's happening. And they become visceral with respect to how they're going to attack the board. Get your attorney involved, be able to communicate clearly to the owners what the next steps legally are to address it. Again, this is a really colorful example, but it's a true example. These types of things take place. And again, to our owners, for the board representing those owners, it's a serious situation, because you're being asked questions. The answer is going to come from a legal perspective for that particular situation, for sure.
So
Watch
that really,
out for abuse and molestation exclusions in your general liability.
Right. And you have no idea the story, but yeah.
So
Sitting in a court hearing and having the judge ask whether or not, as a defendant, you have any plans to have any income, which was way outside the motion for summary judgment of foreclosure for assessments. And I couldn't say anything, like, I don't think his movies are doing that good, by the way. So I'm not sure he's going to be able to say anything, but just saying, true story. Like, I was like, Your Honor, he either paid the assessments or he didn't. His movies have nothing to do with this at all.
I mean, as a manager, your residents have a right to have peace and quiet enjoyment. And I can't tell you how many times I've received noise complaints. This relates to a story that I actually experienced with someone that was running an escort service out of their unit. And it brings back memories of all the women that were coming in and out of that unit and the noise. So I can relate to this story. And it was unfortunate, but we did have to get security involved, and security would knock on the door and ask the people to keep the noise down. And then we eventually found out what it was all about.
Right.
And we shut it down.
So we're sharing some laughs, and I love that about this particular panel, because like we said, you can't make this stuff up. But at the end of the day, when like Marcy or myself, we're doing our work, we're trying to figure this out, we're trying to solve the problem, right? There is a serious component to it, because with that situation, with that story, there's always a serious human element to it. But at the end of the day, from a board's perspective, you just have to continue to move forward and step forward. You can't turn away from what's happening. It's a violation. You have to just address it.
thank you, Paula. I have one last question that I want to jump into, and all of you are going to have a little bit of something to say on this subject, because it is so pertinent to our condominium people that are on here. So what if a milestone inspection comes back so badly that the building is being shut down and deemed uninhabitable by the municipality? How can this be handled with the residents, insurance, financially? Y'all have a little piece of this puzzle. So Jamie, you want to kick it off with financials?
So from a financial perspective, you're going to need to figure out whether you're going to be passing a special assessment in conjunction with a loan or just by itself, to determine how best to finance the repairs that are needed over a reasonable amount of time, because you are not only relocating your residents, which is going to cause a financial impact to them, but you're also needing to make sure that this building gets rehabitable, if that's a word, rehabitable, so that these residents can decide to either stay in it, move, sell. It's still someone's personal residence with their financial equity involved.
I guess this might be a Paula, Marcy. I'm just going to ask the question. Is the association financially responsible for relocating residents in this situation?
The association when a red tag occurs, and just so everyone viewing today understands that red tag is when the municipality has determined that your building, condo building is uninhabitable. It's the safety of it is so questionable that the municipality is going to pull everybody out of it. We've seen it on the news since Surfside a few times. So the association arguably at the outset would not have to open its checkbook and make sure it's relocating those individuals. What usually occurs is the municipality contacts the Red Cross at the same time, and the news outlets hear about it instantly. So the association board is going to know, at least a board member or the manager is going to know before it's technically red tagged, almost all of the time. And so when that occurs, again, you're contacting your attorney, and you're making sure that you're going to make the right steps as a manager and as board members. But once the municipality red tags that, they'll also be calling in the Red Cross. So the Red Cross will be there to relocate people. Yes, the answer would be yes. Any living, alternative living expenses and cost would be the association's obligation. Now, how you would filter that through would not be an easy linear process. It would be, multiple layers with people claiming damages against the association. But at the end of the day, if you've actually been red tagged, that's probably on the hierarchy of things that are important to deal with immediately, on the very lower end scale of that. But ultimately, yes, somebody would have a claim against the association for their alternative living expenses.
And you're gonna have a
can
going
share a
concern
story.
financially. You're gonna have a going concern financially, and people that are gonna be looking to buy in there will not buy in there. They're gonna see an audit report that's a going concern. They're gonna see this milestone is bad. You won't be able to sell the units.
And I've seen
That's
even,
what-
it doesn't
that's
even
where
have
you
to
have to
be.
worry about an
sorry.
association filing bankruptcy, right, Nicole?
Right.
That's a major concern, because it's also a concern to a bank. If a bank has an existing loan to a property and the association is filing bankruptcy, the banks are very cautious today when they're doing loans to associations to ensure that the milestone reports are done, that the CSRS report is completed. Banks are going to be asking for copies of those reports. And what is the board's policy for completion of those repairs before any financial funds will be agreed to be distributed?
Exactly.
Yeah, I have a question, and this might be a stupid question, but Matt, would the association's insurance policy cover that alternative living in the policy?
Good question.
I guess it depends, to quote Paula. Paula's favorite answer. I'm thinking through the different scenarios of how that suit would get formed. There'd be the directors and officers claim against the board. And a lot of the policies do have defense for failure to maintain. So that's going to provide your defense, maybe some form of settlement. If you get a claim like that, it's probably going to end up going to the general liability as well. So it's a matter of, would there be any triggers in that policy that are going to get the defense and then maybe even have some judgment kicked out of it. One of the other places my head went is why it's important for owners to have their own personal policies, is your own personal policy is going to have loss of use. The same way if you had a fire in your unit, your policy will help you pay for your living expenses elsewhere while you were taking the time to maintain that unit, so you can try to kick in for the loss of use expense out of your own personal policy. Now, if you have owners that don't have mortgages, and that's a large percentage of the homes down here in South Florida, you're 100% going to get those lawsuits where, maybe their policy would have picked it up, but because they don't have the coverage, now they're coming after the board. And there's going to be lawsuits flying on an example like that. And then, then the other place my head goes is, it's more than likely that your insurers are going to find out that you've had this, and the ones that are claims made policies or occurrence policies that vary which ones are, they're already going to be on the hook for those types of claims. But I could absolutely see your property policy, your wind policy, especially property excluding wind. If this is I'm thinking of like a high rise near the water, 70s, 60s, you could see them drop coverage and us have to place a much more limited policy. So I'm thinking of one client, they're about a $10 million building down south. I won't name the specific area, but they never did their 40 or 50 year recertification. They should have been paying about $25,000 for their property excluding wind premium. They ended up paying 110 because that's the only company that would give them the quote that at least made it, so they had a policy in place. The terms were terrible, the price was terrible, the deductibles were awful. I think there was $100,000 deductible, but at least they had that policy. So there's a lot of different things that are gonna unfold in a scenario like that.
I just want to point out too, the moral of the story should be don't get to that point. But I think it's important to also point out that in light of Surfside tragedy, there are certain things that can be disregarded for a period of time that can get your building red tagged. So it is not necessarily the worst case scenario. Now you're red tagged. It can be your stairwells. It can be something that is ingress egress that has created a danger. So it doesn't have to be that your building is in such a condition that, our common sense thought would be, oh, it's so dangerous, nobody can go there. It can be a catwalk, it can be a balcony, it can be certain things with respect to if you're doing work and you don't have the support system set up because your engineer has ignored that piece of it. So I've seen it in a couple different ways in the last few 3-4 years where I had to fight against a red tag for my clients pretty viciously at the city level or a town level because it was a stairwell or it was something with respect to ingress and egress. So just keep in mind, it does not have to be what our thought would be, our imagination directly draws us to something so horrific. It doesn't have to be that bad per se to have a red tag situation come up.
I'm glad that you said that, Paula, because the most common one that I see that the city gets fought with, the towns fight with, are your fire life safety panels, because the parts that it takes to replace those takes so long to get. Again, the moral of the story here is preventative maintenance will help all these things not happen to you when it comes to the red tagging. And Marcy, I know that you have a story about this one as well.
Yeah, I just wanted to share with you a situation where I had an association that was going through concrete restoration and the spalling was so bad. It was a post-tension building and the high rise was undergoing, major concrete restoration, which required some of the owners had to evacuate because they were invasions where the spalling just went right through the unit and the floor was just not safe. So in that case, getting back to the HO6 policy, some of them did have coverage that covered their stays. And also the association did set aside funds to help support some of those members that didn't have it. Now, I'm not saying that they should, that's something every individual case on a case-by-case basis. But when you are looking to fund these projects, I always recommended a line of credit because you never know. There's just not like a one number that this is like what when you're going to paint your building, it's going to cost you X amount of dollars. There may be some change orders here or there, but when it comes to concrete restoration, there's so much of the unforeseen and your residents are going to be impacted in so many ways. So be prepared.
So I'd just like to clarify that. So a bank isn't going to provide a line of credit for a project. They'll provide a term loan with an upfront interest only period that matches the construction period. So your interest rates are locked in from the date of closing, so you're not concerned about that. But lines of credit are generally used for hurricane deductibles, emergencies that are unbudgeted in your financials, an unbudgeted line item altogether, right, Nicole?
Correct.
Yeah.
That's what most of
Thank you for clarifying that. Was I used the wrong terminology, but
that's okay.
Absolutely
A lot of people do get confused by the nomenclature. So being able to clarify that, I think, is important, especially for a lot of our attendees on the class today.
Absolutely.
Well, thank you, Jamie.
But
I absolutely appreciate you providing that information because that's definitely the way to go.
I want to thank everybody for joining us here today. We did go a little bit past 11 o'clock. So I want to open it up to our audience right now. If you have any questions, extreme situations you want advice from this expert panel on, we'd love to do that. And I want to start with, if the owners have to evacuate during a red tag, are they responsible for making their monthly fee payments still?
That is a hard yes.
Thank you,
No, I'm
Paula.
serious. So, yes, anytime you have your assessment obligation, it does not end when you have to evacuate. It does not end when you are disputing the concrete restoration expenses and cost. It does not end when you don't like the board. It does not end. Even if you have a proper valid excuse, pardon me, reason that you believe exists and you file a civil action, you still have to pay your assessments. You still have to pay the assessments for the special assessments that the association levies against you for the lawsuit that you filed against the association until you win. So the statute controls when you win, you get your money back, but you have to pay your assessment. So don't be in a situation where you have a potentially valid claim against the association that you're fighting in court. You still have to pay your assessments. But if you do prevail, you will be refunded those assessments for which were related to your fees for litigation.
And that's true for units in foreclosure as well, correct?
Yes, yes. And
Awesome.
again, I'm just going to say this. You can imagine the chaos if that was not the law in Florida for people's ability to not pay assessments if they had a dispute regarding even the basis for the assessment.
Well, thank you very much, Paul. I appreciate the clarification. I don't see any other questions in the chat here right now. We will be doing a follow-up panel for what if. We only covered some of the questions today that you guys all sent us, so thank you for sending those in before. And as always, this is an expert panel of industry specialists. So if you have specific financial questions, insurance questions, audit questions, legal questions, water, fire, mold, construction questions, please feel free to reach out to anybody on this panel at any time. We will be sending out the recording of this after the class, and stay tuned for our next expert what if panel.
Great
Thank you all
job,
for joining
Erin,
us.
as the host. Thank
Thank
you so
you,
much.
Erin.
Thank you.
Great
Great
job,
job,
everybody.
everybody.
Good to see
Always
everyone.
good to see you.
Good to see you.
Thanks.
Thanks,
Thank you
everyone.
for
See you
having
next
me.
time.